You're listening to the Cash Flow Academy podcast with Andy Tanner, your source for investing made easy. Here's Andy Tanner.
Welcome to the Cash Flow Academy podcast. This is where we make investing as simple as possible. I'm your host, Andy Tanner. Wonderful guest, very timely guest for today's show. We're going to hop right in. We have John Tamny with us. And you might have recognized John before from articles that he's written. You know, you've seen him on TV, things like that. And he has a really timely book right now. It's called The Money Confusion: How Illiteracy About Currencies and Inflation Sets the Stage for the Crypto Revolution. So obviously we'll be talking about monetary policies, and we'll be talking about crypto, which is a really interesting place as of right now. And so, John, first of all, thanks for coming on the Cash Flow Academy show.
Well, thanks for having me on. I appreciate it.
And just to begin, maybe give just a little bit of your background about what brought you to decide to write this book. You have quite a background, but give a little bit of your CV and tell us a little bit about yourself.
Well, dollar policy and money policy has factored into just about every book I've written. And what caused this one to be written is that I feel that both sides have completely confused what inflation is, what money is, why it exists, why it circulates. And so I wanted to write a very short book that basically rejects all the conventional wisdom about money and inflation, and that hopefully provides clarity for people who've been confused by both sides about what's happening in the economy, what's happening with money right now.
Well, it's a really interesting read. I just finished your book yesterday, and when you say you have some things that are unconventional, very, very true, and yet a lot of what you said rang true to what I actually teach my kids right now about money. So this will be a lot of fun. First of all, I'm gonna read something that was in your book. I'm gonna quote it. And I think people will first maybe knee-jerk a little bit to this, but I think as we talk about it, I hope I understood what you're trying to say, and it has to do with money supply. Because right now, the amount of money on the Fed balance sheet, on their liability side, there's really four accounts. There's the money in circulation that we can say is out there. There's money on deposit at the Fed, member banks. Of course, if it's a deposit at the bank, it's a liability to the Fed. There is the reverse repo market, which has grown tremendously. And then there's finally the Treasury checkbook. And those are the four main accounts. And it tops out about $9 trillion, just shy right now, $9 trillion. And this is what you say. It says, realistically, no productive individual or business need ever worry about how much or how little money is circulating. You want to talk about that a little bit, or do you want me to guess? I actually agree with that. And a lot of my listeners will say, what? Andy's always talking about the money supply. Would you comment on that idea?
Money supply, to comment on money supply is like commenting on how many semiconductors or cars have been produced and saying that too many or too few have. We would laugh at a politician for talking about that, yet we don't laugh at economists for talking about money supply. Well, money is wherever there's production is. Money actually circulating that productive people actually exchange with is wherever there are goods and services to move around. And money's also not where there are goods and services to move around. This isn't planned. Most dollars circulate around the world. If you and I were to land in Tehran or Caracas or Pyongyang and we wanted to actually buy things, we better have dollars in our pocket. Dollars weren't put there by the Fed. They're just there because there's some production there that needs to be moved around. It's a natural market phenomenon, and this is something that both sides completely miss.
I thought the key word, because when I read that, I highlighted it immediately. I said, "Now wait," because I actually spend a lot of time, on different tools and reading different, pieces of information. I actually track that, and I thought, okay, I love it when I come across something that can possibly change my mind on something. And so I had to read it a couple of times because I've very much believed that the Fed has printed too much money. I very much believed that that there's too much out there. And then when I reread it, I thought, no, Andy, there's one little word in there. And I think it really speaks to part of the power of your book. It says no productive individual. There's a little bit of a qualifier there, no productive individual. And we're going to talk about crypto here in a minute. And regardless of where things land, the thing I've always taught my kids is say, look, the way to prosper in this economy is to be productive, to be on the producer side of things and actually produce more than you consume. And you talk about savings in an interesting way in that when you have a surplus of cash, it allows you to invest and it allows you to divide work amongst many people, which creates a synergy that the monkeys don't have or any other animal kingdom doesn't have. Is that close to what you're saying?
Yeah. What makes us different from the snow monkey that I talk about in the book? With snow monkeys, wealth is a fixed pie.
Yeah.
Brute force is what feeds you the most. If you lack it, you will not eat as much. In the real economy, in the human economy, success is born of serving people. It's born of dividing up work, of everyone working together on the way to creating a wealth pie that grows and grows and grows. And so it's so different, but this is so misunderstood. People talk, well, inequality. Both sides say inequality is bad. Oh, we're not that unequal. Well, I hope we're unequal because everyone brings different skills. And it's the fact that we have different skills that allows us to divide up work and specialize and produce on a level that would stagger people who were alive just a few decades ago. This is a wonderful thing, and money's a huge part of this. Money that's trusted allows us to work together. I will pay you dollars to do something that I can't do, and you will take those dollars. Those dollars are exchangeable for real goods and services.
Let's chapter 3 is a really, and this kind of sets up chapter 3 a little bit. It says that money finds you. And that's an interesting thing because people often, I think they get it backwards in their context. I think the reason this book is a particularly practical one, meaning that it's not just a theory, but you could apply this, is it is a bit of a context shift in that people often chase the money and they have the mindset of chasing the money rather than the mindset, how might I say this, that if you serve enough people, the money takes care of itself, that it'll come to you when you focus on service. And I think it's a wonderful, it's a subtle context shift, but I think it's one worth talking about.
Yeah, it's crucial. There's this view out there, well, the Fed is raising interest rates, and so there won't be money to facilitate production and growth. Have people lost their minds? What is the Fed this entity that we go to get money to produce? No, money is what happens when we produce. And I point out in the book, I can't remember, I don't have the book in front of me, stupid me, but China's growth in the 19th century, in the 20th century, and also in the 21st century has largely been a function of people from outside China. In the 20th century, the two biggest financiers of Chinese prosperity before the communists took over were two Jewish Iraqis who didn't speak a word of Chinese. But they saw growth in the country and they set up shop there. In modern times, if you look at China's huge surge technologically and all these great tech companies coming out of China, these were largely financed by U.S. VCs. Yet people in the U.S. and around the world, oh, what will the Fed do? What will the Bank of China do? What will the Bank of Japan do? It's like, it's hard to have a serious conversation with people who would think like this because in the real world, what the Fed does doesn't mean anything.
It is now here's, let's jump ahead a little bit. And this is an interesting thing. So you spend a really good amount of time building to chapter 8, where we start to talk, more specific about crypto. And there are some people in the camp where this is just tulip mania, which you discard if I read it right. You say no, this is not just tulip mania. And there are others who say, look, these are growing pains, basically. And I think that's, well, it'll say this in your book. You say, let's call the collapse of crypto concepts an information-producing growth spasm. In other words, maybe this could be analogous to the dot-com bubble, where we have this, this big buildup of, Silicon Valley and what, people don't even know what the web is, and they're investing in it, and there's a lot of fly-by-nights and growing pains. You have a massive crash in 2000 in the spring, and then the FANG trade comes out of it, and the dust kind of settles, and okay, Amazon looks like they're the ones, and Facebook, okay, Instagram, they Meta, they look like they're the social media guys, and so forth. Would you like to comment on that, and if I'm off, correct me in how I'm taking it?
There's no such thing as bubbles. I hate
you
bubbles.
say that.
I think that's such a lazy word that presumes massive information asymmetry, that there's only buyers in a market or only sellers. No, there's just production happening. There's information being produced. And so if you go back 100 years, thousands of car makers were incorporated. Cars were kind of an exciting development, I think we would all agree. Just about every single one of them failed. Bubble? No, an utter transformation of the economy. And a few survivors transformed how we lived, worked, living standards around the world. Fast forward to the end of the 20th century, the internet was all the rage. As you allude, all sorts of companies were created, all sorts of fiery failures. Was that the end of the internet? No, it's a fact of life today. And the most valuable companies in the world largely are based on their internet presence. And so the fact that crypto, and this is, as you note, this is how the book begins and ends, is experiencing carnage right now, that's not a sign of crypto being over with. It's a sign of crypto's staying power, that the market is real now, that basically investors are pushing out what doesn't make sense, and they're going to gradually center on what does make sense. It speaks to crypto's future. And I wrote this long before the book came out. I wrote a column saying that we'll know crypto's for real when its coins start crashing.
Yeah.
Well, they're crashing. It's real. This is a real market, finally. This is a growth spasm. You have to have this. I wish we could have this every year. We'd be a much richer country if we had what lazy people call bubbles happening all the time. That's a sign of progress.
So just a reminder to everyone listening, we're speaking with John Tamny, and he is the author of The Money Confusion, How Illiteracy About Currencies and Inflation Sets the Stage for the Crypto Revolution. And it's a wonderful book, I think, for anyone really, because I think there's one justification for studying this area is money will change. When we look at the U.S. dollar, and you go into a little bit of Bretton Woods and a little bit of the time frame anyway, 1944 to 1971, where you speak about the departure from the gold standard and what money is, and that's a very common conversation that people should learn about, that many people don't. Everyone should understand that. And the Bretton Woods Agreement put the U.S. in an interesting, if not an envious position. It also, there's burdens with it. But when you're the world's reserve currency, there is a special status of a U.S. dollar. As you mentioned, if I go to Russia and the people are throwing, and I'm a street performer and someone throws a ruble into the hat, I think, well, okay. But if someone throws a U.S. dollar in there, maybe I might pause in St. Petersburg or something and say thank you. I think that's going to change. I think when I look at the information I have, that the world is ready to move on from that. That will take some time. But I guess the point I'm making, that the reason this is an important read, if you're listening, is to find everything you can on the possibility that it may lose the status. I think money's changing. I guess that's a long-winded way of saying money's going to change, and it's important to learn about it.
You know why it's changing? And it's talked about in the book. There's $10 trillion a day
being in Forex. Yeah, in Forex. Yeah.
What does Jeff Bezos always say? Your margin's my opportunity. And so with all this currency trading, that's a sign that capitalism still desires the stability of gold-defined money.
Yeah.
It just hasn't had it.
And
so why is it money going to change? Because capitalism demands a more stable unit. The dollar is the world's currency right now. As I mentioned throughout the book, the dollar, for all of its demerits, is what people use around the world for money. But it's still unstable, as evidenced by all this currency trading. And so capitalism, what does it do? It erases margins. And so capitalism, a capitalist system that can put a supercomputer in my pocket and can build buildings that will soon go miles into the sky, can most certainly create a stable currency that people trust and circulate. And that's what I think we're going to get out of this crypto stuff. I think it's almost sad that we call it crypto. It's just private money is going to replace government money.
Now, this is that was another interesting point in your book. Is not just when you do a good job of creating frame of reference, because you begin with what the volume used to be. And I remember the days where you quoted where it was 4 trillion a day, and now at 10 trillion, and to interpret that as as an instability was a very interesting angle that I enjoyed. I enjoyed that comment. You talk about the aim of the money confusion, and this will bring us to a really good part of this discussion. The aim of the money confusion is to simplify what should be blindingly clear, in the hope that future discussions of what is a logical consequence of production won't be so ridiculous and confused. So you're achieving your aim, because here we are in a future discussion. Here we go.
Yeah.
And I have been I don't know that I'm an old man yet, but I've old enough and I've made enough and lost enough that I'm really open to what a lot of people have to say. I've found there's a truth in Steve Jobs' statement that says, don't be trapped by dogma. Don't be trapped by other people's thinking, right? Really be open and also follow your own intuitions. And I also think that it's possible to have discussions where there is question or disagreement or skepticism without having CNN and Fox News have hate speech for anyone you disagree with. That's just incredible. But if I may, I'd like to have a civil discussion and play devil's advocate, because I own some crypto, and I have some Bitcoin, I have some ETH, and I'm not really an active trader of it. I've held it, and I've actually sold options on it for cash flow. And so I've been watching that. And initially, the approach I took was one where this was emerging. Much like stocks, unlike stocks, stocks will produce a dividend often, and you can supplement that with premiums by trading the options. So I don't trade the crypto, but I do like to sell the crypto options, which is a very thinly traded, brutal spreads, and it looks like the options market. It looks exactly like the options market for the stock market did. It's in infancy, so you'd expect it to mature, or at least speculate that it might. But I'd like to play devil's. So with that said, often when I speak with guys, and I couldn't figure out where you were as I was reading in the book, is there's a lot of dogmatism around crypto. And I think it feels a lot like what you've said. In the 90s, there was this internet coming about, and this World Wide Web, and there was e-commerce budgeting, and e-commerce was going to be the new thing, which it became the new thing, but it didn't wind up being like anyone thought it would look like back then, if that makes sense. So it feels a lot like that. But it also has some also does feel like a little tulip mania, some greed and some FOMO. You use the word FOMO in your book. So let me play devil's advocate. Here we have a couple of things that concern me about crypto, and maybe if you can either settle people's minds or just say, Andy, you're wrong. I look at Tether right now, and I think it's fascinating. Crypto, if you look at Bitcoin as an example, you have an immutable ledger that is open and could really be viewed. It's connected to who knows how many different computers around the world. It's double, triple, quadruple checked, burning all this electricity, checking itself to be uncentralized, transparent. There you go. Half of that Bitcoin, well, it's shrunk now, but a lot of, let's just say billions and billions of Bitcoin is traded every day through Tether, which is totally centralized, totally the opposite of transparent. And it's basically serves as a money market for the crypto world. In other words, stable coins have to act like a money market. They need to put their assets somewhere where they can earn money without breaking the buck. Does that make sense? Is that a good premise? How does that work? Where on the one hand you have this idea of this decentralized, immutable, transparent thing, and yet it's traded using a money market system where the money really is the tether. That's your stability. And it has nothing to do with the stability of the crypto, if that makes sense.
I think so, and I think I know where you're going, and I agree with you. I think based on where I think you're going, what I always tell people is if you're speculating on if you're getting into crypto because you think you're going to make a lot of money because it's going to go up, then you don't understand what you're doing. Money is not a speculation. No one speculates about the foot or minute or tablespoon. They're just standard measures. Money is a measure. And I can't quite put my finger on it, but I deeply feel that the problem with crypto right now is that the very phrenology, the very wacko thinking that has made economics basically a cousin of astrology is infecting the crypto space. There's all this electricity used for mining and
Sure.
this and that. No, money is just a measure. And once again, a capitalist system that can put a supercomputer in my pocket can easily create a trusted measure. Nothing more, nothing less.
I by the way, I really enjoyed that metaphor of money being a measure. You hit it a couple of times. You'll say, well, there's, a teaspoon is a teaspoon. It just is what it is. A foot is a foot. A mile is a mile. A pound is a pound. Interestingly enough, we have the British pound. So I think one of the great takeaways that I loved about this, and I don't want to say that it's not about crypto because who knows what it's going to be. I think there's an obsolescence risk to crypto myself. We talk about, you mentioned the Burj Khalifa multiple times, and the in your book is a model of human potential. And of course, that's going to be replaced by the folks in Saudi Arabia really quick. In other words, there's always going to be a taller building. As soon as they finish one, we'll start on another. And when I look at crypto, I tell people, I go, well, especially young people, I'll say, well, crypto's a lot like Netscape, I think. And they say, what's Netscape? And I say, well, back when if you would have been around and born when the World Wide Web was born, and this protocol, hypertext transfer protocol, this technology was budgeting, you used Netscape. And Netscape basically isn't much different than the browsers we have today. And yet its obsolescence risk, it's gone.
Well, I think that's in the book. I think I have it. I say that Bitcoin, my speculation is that Bitcoin will be the Netscape of this. A huge instigator of massive investment and interest among people. For sure. It doesn't survive.
There'll be a better mousetrap.
Is not money. It's not money. And I can't, people keep saying, well, Bitcoin is a hedge against inflation. No, it's not. The fact that gold's a hedge against inflation precisely because it doesn't move. Yeah. Gold only moves in terms of the currencies in which it's priced, which is why it's the perfect inflation hedge. And so Netscape, oh, hey, Andy, I'll remodel my bathroom. I'll pay you a Bitcoin now, a Bitcoin in 3 months, and a Bitcoin in 6 months. You'd logically say, okay, well, which one?
That's a great
the one
part.
That cost $68,000 last year.
19,000.
19. It's all over the place. And so Bitcoin has, people get like, oh, Bitcoin, it's gonna put currency, government money out to pasture. Okay, look, if you want to talk down about government money, I talk about it throughout the book. Yeah, governments have always devalued, but Bitcoin represents the worst aspects of government money, just many times more. It's exponentially more turbulent, and that's what I don't think people get. And so I think, yeah, this is Netscape. I don't think it's going to be the one standing when this is over with, but I do think private money is going to eventually push out government money for the reasons that we know.
You give some if people Google enough, they'll find some interesting speeches that you've given. You can find them around the internet. I found one on Vimeo that was really interesting about how the government can get in the way of these things. Can you talk a little bit about the balance, if there is any? You know, I really believe that if you want to screw something up, give it to the government. And if you want to do something well, give it to the private sector. I'm a capitalist through and through. I believe I loved what you said about jobs. Because I've used the same analogy as well about, if you can put 300, I would never be able to go into my garage in my lifetime and build an iPad. I don't think I could divide that work up to produce 300 million iPads and then put them all around the world. You're going to attract money with that type of production. You're just going to get wealthy. And people often say, well, why does Jeff Bezos need, 15 houses with 15 swimming pools? Well, when you're in a situation where you get the world, you push a button. I guess we always forget what they produce. We see the money that they accumulate, these units of measure, but we forget they're produced. So I'm a capitalist through and through. That said, in the midst of the FTX debacle, and this won't be the end of it, Tether. I mean, if we ever saw telltale signs of something fishy, Tether is just. I'm perplexed when I look at we've already know they're willing to lie. We've already fined them once. We already know what kind of people they are. I think Tether's just going to be the one you could have seen coming. If you didn't see Madoff coming, you didn't see Enron coming. If anything had telltale signs. What is the balance of regulation and government involvement and private ingenuity when it comes to the next thing that we will call money, whatever it looks like? What's the balance there?
I don't think there is any. My strong sense is that private money is going to push out government money kind of by accident before regulators notice. I think it's going to be kind of like Uber, where overnight everyone loved Uber and politicians didn't have the nerve to basically crush it because it was so beloved. On both sides. I think you're going to see that with money. People keep saying, well, government will create its own currency and push out the private money. No, it won't. And the reason we know it won't is because government has devalued money as long as it's been involved with money. So there's your answer on that. Government doesn't know how to do money. Can it regulate this? I'm one of these wackos who keeps defending FTX and who keeps defending Sequoia, the best VC in the world for investing in it. They on a daily basis are taking risks on delusional, psychopathic, certifiably crazy people who think they can break some of the biggest companies in the world. And so
that's capitalism.
Precisely, and I get more of some of these submissions from people saying, "Oh, see, I could see the red flags with FTX." Oh, really? Oh, you could see what an $85 billion VC couldn't see. I find that so obnoxious. Isn't it great for all of us? I get to buy blue chips, buy and hold. VCs every day have to look for the nut jobs who think they are going to break the blue chips. And so, is Tether next? Are there going to be more explosions? Of course there are. There were in cars, there were in internet. Mm-hmm. Do we know what they're going to be? Do regulators know? Look, if regulators knew what was next, they wouldn't be regulators. They'd be making real money. It's hard to know, but thank goodness there are wacko people out there like Sam Bankman-Fried who are trying something new. Now, look, if he stole money from people, that's something different. Yeah. But I find it so insulting when people are just, oh, well, yeah, he wore cargo shorts and everything. And it was just so obvious that he was a fraud and everything. Oh, please.
Yeah.
He tried to do something different.
Whether you wear cargo shorts or not. Yeah, whether you wear cargo shorts or not a big deal. But it does seem that when I look at Tether, their violations thus far that they kind of got their hands slapped for, that tells you what type of shenanigans that they got caught with. The book is The Money Confusion: How Illiteracy About Currencies and Inflation Sets the Stage for the Crypto Revolution. I love that you mentioned the word illiteracy in the title of your book. The reason I recommend this, everyone, is it is so critical to study in this day and age, in my opinion, depending on what your goals are. And I'd like you to talk a little bit about illiteracy, if you could. Let's just take your book's a very global book. It's a big picture book. It certainly wouldn't be. You draw analogies from everywhere in the world, from St. Petersburg to to the monkeys in the International Zoo, Burj Khalifa, all around the world. But let's just talk about the U.S. for a minute. What does it mean to have an electorate that is financially illiterate, in your idea?
Oh, I don't. I would say that the electorate is, in total, rather illiterate, rather brilliant, because it's everyone's combined knowledge. There is some illiteracy about inflation, but I would say that it's more among economists. People know what inflation is. I, of course, argue in the book that this is not inflation. Inflation is a devaluation of the currency. We haven't seen that in recent years. But I think people know it. And you know how you know they know it is every time governments destroy a currency, people lose it. It overturns the basis of society. That's something Keynes understood. That's something Mises understood. That's something Lenin understood. What did Lenin say? You want to destroy current society upside down, debauch the currency.
Mm-hmm.
People get it. Economists think inflation is caused by too much economic growth. Economists think inflation is caused by rising prices, which is like saying wet sidewalks cause rain. The illiteracy is among economists, not among the people.
Well, I think the people should read your book as well as the economists, because my experience is most people have no idea what monetary policy even is. And I look at their 401ks. I look at their prospects for retiring. The numbers aren't good. And so I wholeheartedly recommend everyone pursue their financial education. I think a good part of that is to drop by Amazon.com and purchase a copy of The Money Confusion:
Right.
How Illiteracy About Currencies and Inflation Sets the Stage for the Crypto Revolution. The final thing I think the greatest message of your book, and we touched on this earlier, and I'd like to finish on it, is the idea that it is about production. And even if you're a guy like me that has a plan, I just think the power of compounding is so practical. I think it's applicable. I think it's a power source. It's a nuclear It's a financial nuclear power plant that many people never find the consistency and discipline to access. And when you talk about production, it reminds me of the conversations I have with my two teenage boys. I'm an old man, had my kids late in life, so I still have teenage sons, age 15 and 17. And they've been compounding for, since their early teens, and they're too early in it to see the fruits, but they can see the table and where it's taking them. And I would just tell people, you have the opportunity to produce, even if you decide to buy a blue chip. Because to me, I look at a guy like Warren Buffett, and he sells Dairy Queen Blizzards. He sells Duracell batteries. He sells See's candies. He sells these ordinary things, and his focus has always been on, he sells Heinz ketchup. And I think a lot of people are so worried about trying to find out what the next crypto is so I can get my hands on it and go up, that if you just get in the ketchup business or get in the Dairy Queen, Blizzard business or the furniture business, and you share, literally buy a share of this productivity over time, you can reap the benefits and build, get your part of the, the Burj Khalifa is a great thing, but it's a producer. There's people renting space in there. It is a piece of real estate which should produce more capital, more value for people. And you can share in that. And I think that's one of the more articulate and important parts of your book is that subtle yet really important shift of saying, look, the reason that you may not need to worry too much about money supplies or feds or circulations of money or velocities of money would be that, hey, are you putting yourself in a position to serve? And are you participating in capitalism on the service side, putting in and producing, or are you just on the consumption side? Any final thoughts on that? Really important. I think that's essential. That's the essence of the book. Well, essential. I think that is the essence of your message.
Yeah. If you're producing, money's going to find you. Don't focus on all this other stuff. Don't worry about monetary policy. If monetary policy is good, you don't have to think about it. Just produce, and money will find you. Good money that you can exchange for other things. And Warren Buffett's genius was, as you allude, it wasn't finding the greatest. It wasn't finding the high flyers. It was recognizing that progress is the only constant in free life. And so once you know that, put your wealth to work and let it grow for you. Wealth is created, and in a free society, wealth will constantly be multiplied. And it's just how we measure it.
You've been listening to my special guest, John Tamny, on the Cashflow Academy podcast. You can catch more of what he has to say on programs like CNBC, Fox Business, and of course, all around the web. In summary, never more important time to learn about money because it's changing. And whether that takes the form of cryptocurrencies, whatever type of digital currencies, very important to learn as much as we can right now, because certainly changes are coming in the future. Thanks everyone for joining me. We'll see you next time.
You've been listening to the Cashflow Academy podcast with Andy Tanner. For more information on investing made easy, go to thecashflowacademy.com.